Just so we're crystal clear, this isn't financial investment or tax advice, all right? I'm just breaking down the charts using Fibonacci for discussion only. Whatever you decide to do with your money, that's 100% on you.
Solana's entire all-time structure, from its first listed price at 50 cents in May 2020 to that historical peak at $293 in January 2025. Here's how every level fits together across nearly 5 years of price action. This range from 50 cents to $293 defines the foundation of Solana's complete price map. Every future move builds on this pattern. It started at the all-time low in May 2020 at just 50 cents per token, then ran all the way to $293 by January 2025. That's nearly 600 times growth in under 5 years, one of the strongest performances in the entire crypto market. The Fibonacci retracement levels show how each wave of accumulation and correction formed this structural framework. These levels aren't arbitrary, they represent mathematical relationships where buying pressure and selling pressure historically reached equilibrium. Understanding where price sits within this range tells you whether bulls or bears have structural control at any given moment. Right now, we're looking at the complete map from the absolute bottom to the absolute top. Every rally, every correction, every consolidation phase happened within this framework. The pattern repeats because market psychology repeats. When price approaches these Fibonacci levels, traders react, some take profits, others add positions. That collective behavior creates the structure we're analyzing today. Let's walk through each major Fibonacci retracement level and understand what happened at each zone. At $224, the 0.236 level price met its first major resistance after the peak. This is where early buyers from the previous cycle began taking partial profits. The market tested this level multiple times, confirming it as a psychological barrier. This represents a 24% retracement from the all-time high, a relatively shallow pullback that suggests strong underlying demand. The 0.382 zone sits at $181. This became a critical balancing range where the market paused twice during the correction phase. At this level, the retreat deepened to 38% from the peak. This is where medium-term holders started questioning whether the trend would continue. But notice price found buyers here, indicating this zone has structural significance. At the 0.5 level, $147, we hit the mathematical midpoint of the entire all-time range. This is equilibrium. Exactly halfway between 50 cents and $293. When price trades at this level, neither bulls nor bears have clear control. It's neutral territory. Every bounce from here in the past formed a base for the next leg up. This is the line in the sand. The 0.618 retracement sits at $112. This is the golden ratio, 62% retracement from the peak. Once price drops below this level, the bullish structure comes under serious pressure. This is where momentum completely fades and the correction enters a deeper phase. Below 112, long-term holders start getting tested. The market is asking, do you still believe? Down at $63, the 0.786 level, we're in deep value territory. This represents a 79% retracement from the all-time high. Below this level, the entire macro uptrend would be questioned. This is where only the most convicted long-term holders remain. But it's also where smart money accumulates for the next cycle. This level has only been tested in extreme market conditions. The nearest support currently sits at $181, that 0.382 level we just discussed. This is the higher timeframe value zone where long-term structural buyers step in. If price breaks below this level with conviction, there's not much structural support until $112. That would signal a deeper correction is underway, potentially retesting the midpoint at 147 first. The key resistance remains at $224, the same 0.236 level that's capped every attempt to recover toward the all-time high. Each time Solana has touched this resistance, it's faced heavy supply. Sellers show up consistently at this zone, confirming it as a structural ceiling. This tells us there's overhead resistance from holders who bought near the top and are waiting to break even. What's critical to understand? Until price breaks above 224 cleanly with volume confirmation and sustained follow-through, the macro trend remains under pressure. A clean break means closing above it, holding it as support on a retest, and then continuing higher. Just touching it isn't enough. We've seen multiple rejections already. If and when 224 breaks convincingly, the next target becomes the previous all-time high at 293. Beyond that, we're looking at the Fibonacci extension zones, which we'll cover next. But for now, the battle is between 181 support and 224 resistance. That's the current range that defines the market structure. Fibonacci extensions project potential targets beyond the initial range. These represent where price could go if bulls regain full control and push into new all-time highs. The 1.272 extension sits at $373. This is the first major target above the previous all-time high. Reaching this level usually confirms that the correction phase is over and trend reacceleration is happening. It's approximately 27% above the previous peak. Historically, when a market breaks to new highs and reaches the 1.272 extension, it signals strong momentum returning. This becomes the initial breakout target. The 1.414 extension at $415 represents sustained momentum. Getting here means the correction is not just reversed, it's completely negated. Bulls are back in full control. This level sits about 41% above the previous high. Markets that reach this extension typically pause here briefly before deciding whether to push for the final target. Volume and participation need to remain elevated to sustain movement at these levels. The 1.618 extension, $474, this is the parabolic target. The mathematical projection says if Solana were to extend with the same proportion as its previous cycle, this is where it lands. That's 62% above the previous all-time high. But reaching this level requires more than just price movement. It requires sustained volume, broader market participation, and fundamental catalysts. Breaking through the 1.618 extension often signals the start of a new macro cycle, not just recovery from the previous one. These aren't predictions, they are mathematical projections based on the structure. Whether price reaches these levels depends on market conditions, adoption, competition, and countless other factors. But the structure gives us the roadmap of where key targets sit if momentum returns. Bringing it all together, Solana currently trades in the upper middle zone of its all-time range, which gives buyers a moderate structural edge. Price is above the critical midpoint at 147 and above the 0.382 support at 181. That's constructive. but it remains below the 0.236 resistance at 224, which keeps the macro structure under pressure. The key level to watch is $224. A clean break above this resistance with volume and sustained follow-through would target 373 first, potentially opening the door to 415 and beyond. That would confirm the correction phase is complete and a new leg higher is beginning. On the downside, as long as 181 holds as support, the foundational bullish structure stays intact. A break below would target 147, and below that, 112 becomes critical. Those deeper levels would signal the correction is extending, not ending. Fibonacci symmetry continues to guide Solana's behavior across all timeframes. The market respects these levels because participants collectively react to them. No hype, no speculation, just structure, data, and mathematical relationships that have held for nearly 5 years of price action. That's the framework. That's the map. Follow for structural crypto analysis, logic, data, and clear levels. Nothing else.